Time for the latest earnings outlook now with Research Director Shiraz Mian. Well, one positive trend that has come out of earnings season so far, even though it's only a few days old at this point because we're talking here on October the 11th and we've only had the benefit of, 2 or 3 days of earnings reports. But one positive trend seems to be in the retail area in the form of Costco and Yum Brands both beating and raising guidance. So this seems to be a positive for the consumer, right?
It is, and not to throw cold water on this, this very optimistic take that you want to present of the third quarter reporting season, but yes, the retail consumer discretionary and these ends of the broader corporate world are relatively better placed, particularly if they have U.S. exposure. Now, we have a lot of angst about the U.S. economy and what's going to happen and fiscal cliff and all that good stuff.
Right.
But even with all those issues, the U.S. economy is still the best game relative to what's going on in Europe, China, and the rest of the emerging markets. So companies with strong U.S. presence, exposure to U.S. households, U.S. consumers are relatively, and I'm emphasizing relatively, better placed than many other ends of the economy. We are seeing that in the jobs numbers. Today's jobless claims numbers were surprisingly heavily down. The unemployment rate came below 8% last week.
Right.
So it's not a very fast improvement, but there is improvement.
So, and even though there is that one little bit of positive in retail for now, anyway, that I tried to start with.
That's right.
Off on a good note here, there still is anxiety over this Q3 earnings season. We can't deny that. You say guidance is even more important than earnings beats as far as the market's concerned, right?
That's right. And the reason for that is that we all know that corporate managements have this very impressive track record of managing expectations just enough that they comfortably then come ahead of. And we see that quarter after quarter with companies beating earnings expectations by 2/3. So it's a relatively slow and weak open to the third quarter reporting season at this stage. But if I have to stick my neck out, I would say that by the time we close the books on the third quarter, with respect to the proportion of companies beating expectations on the earnings side particularly, Q3 will not be materially different from what we've been seeing in the last few quarters. What would be more material in my judgment is the outlook and guidance for Q4 and the coming quarters. And the reason for that is that as low as expectations for Q3 are, expectations are quite high for the fourth quarter and in 2012. And that's the primary reason why I'm keeping a watchful eye on what companies are saying for the coming period relative to what they are producing for Q3.
We'll be talking about Q4, I'm sure, in the weeks ahead. But as for right now, give me a quick recap on the Q3 scorecard.
Yeah, very, very early at this stage, as you rightly pointed out. As of this morning, I have 33 companies in the S&P 500 that have reported. The growth rate for these 33 is down 3.3%, excluding finance is down 3.4%. About 51% of the companies are beating earnings expectation. That's why I mentioned that it's a relatively weak start compared to how a typical quarter is. But it's still very early. And we get into the heart of the earnings season next week and beyond. So it's difficult to take a firm view of how the third quarter reporting season will be given the sample size we have right now. But that's the situation right now.
Is the weak global growth picture going to be reflected in Q3 earnings or more in Q4?
It should be. It should be reflected in the Q3 earnings in the sense that That was the reason why we have a negative growth expectation for Q3 to begin with.
I see.
But it will be more material to the guidance for the fourth quarter, as I was referring to earlier, and we have started seeing that already. You mentioned Yum brands coming ahead of expectations, but mostly on the base of domestic strength. China, which was a big part of their growth story for the last many years, was kind of subdued. We heard that from FedEx, we heard that in Nike. So the international growth question we will be hearing more and more about as these companies guide towards the fourth quarter and beyond.
As companies continue to lower expectations, Shiraz, are the earnings estimates that are coming in realistic or unrealistic?
I would say unrealistic. They are on the lower side for Q3, and that's why I was saying that 2/3 of the companies will get ahead of them. And I think they are on the higher side for Q4. And that's why I think they need to come down. So they are unrealistic for different reasons.
Yeah.
But they are unrealistic.
A very interesting situation at work here. We know you're going to keep monitoring for us, and we will talk again on video here in the next couple of weeks. In the meantime, Shiraz will be updating earnings season progress primarily in the Ahead of Wall Street section on our website on a day-to-day basis. That's in addition to the printed article that he writes for Zacks.com as well. So keep an eye on the Ahead of Wall Street section on Zacks.com for scorecard updates and other earnings season updates as we go through this Q3 earnings season. With Shiraz, I'm Terry Ruffalo.